Fellow traders, 'tis I, TheRumpledOne, coming to you on Wednesday, August the 6th, the year's 2025. Let's talk trading. Feedback. These videos are for educational purposes only. Your results may differ from mine. As always, let's have risk management in place so we don't lose more than we're willing to lose on any one single trade or during any one single trading session. Feedback. When you saw that, or you heard me say that word, you probably thought maybe Jimi Hendrix guitar squealing through his Marshall amps, at high volume. Or maybe when you put a mic in front of a speaker and you hear that high-pitched noise, that feedback. But that's one type of feedback. The type I'm talking about, feedback. Think of feedback in terms of results. And so when we trade, we enter a trade, then we exit a trade, we're getting feedback. Sometimes we win, sometimes we lose. It's all feedback. Now, the thing is, when you look at it as feedback, you're looking at it objectively. Unfortunately, we have emotions when we win and when we lose. I mean, that's just how it is, right? And so, but if we think of it in terms of feedback, we might say, hey, did it work? Did it not work? And then it's not that it worked or didn't work, you see, because that's interpreting the feedback incorrectly. Because it's like, did it work? In other words, did we make money? And did it work? Did we lose money? No, that's not the type of answers that we're really looking for. What we're looking at is, in trading, does it work the majority of the time? Because, remember Soylent Green? It's people. Well, it's kind of the same thing here in the market, in trading. It's people. And so, if we were to take a trade and it were to go against us and keep going against us, then maybe we look at it. We can say, hey, we missed something. Did we follow our instructions properly, or did we miss something? That's one way to look at it. And the biggest thing with the feedback in trading is we have to keep in mind one thing. It's not like baking. I know I've said this before, but it just bears repeating. Because that's where so many traders get things messed up. I mean, look here at this chart. Oh, I had to put in the put this in my blank. But what this does is it puts these X's on turn trades. You could also call them flip-flop boxes. And so you can see there's a lot of X's. If you took every X, would you win? Would you lose? I mean, for example, here, if you took this X and you bought, hey, you could have won. You could have won nicely. If you took this X for the short, you would have gotten killed. If you took this X for the long, it reversed on you. Then if you took this X for the short, it reversed on you. So, you get the setup, but the question is, did you do anything wrong? If you took the trade and it went against you, Did you stay within your risk parameters? And so sometimes you have to understand a little bit more about the method. And maybe you're trying a method, and maybe there's something you don't understand. Maybe there's something you just don't understand about price action, for example. So right here, there was this gap right here. And I'm sitting here, I was talking about something else, but I'm thinking, I know that gap's going to fill. I just know it. It might not fill, you know, within a minute or two, but I'm pretty sure it's going to fill. It's just like there was a gap right here. It filled. There was a gap right here. It took it a little bit longer, but it filled. It's one of those things. Does that work all the time? No, it doesn't. But it works enough times for me to have faith in the method and knowing that the method's not going to win all the time, even though Walmall's on a tear. I can't remember the last time he's lost a trade. He may said he lost one maybe last Friday or something, but he's been on a tear. Um, and so once again, even when you're not in a trade, the charts are giving you feedback. And so, for example, here, you can see price rejected this level. What happened here? Now, it could have broken that level in this time, but it didn't. So the question is, you look at it, it gives you feedback, and then you can act on it. And that's why we say look left. And so you're sitting here and you're watching it. Sometimes you wait for a signal, which is what you should do. Wait for your setup, wait for your signal, take your trade. Other times, you might filter out a signal and say, no, something doesn't feel right. And sometimes you can't even put your hands on it. It's just a feeling you get from watching. So right here, it was like, do you take that signal? I mean, if you look left, it's like a price push back from that level. Maybe, maybe not. Now, you can wind up over analyzing, and then you wind up not taking any trade. So that's one of the reasons we always say, you keep it simple. Maybe you have at most 3 criteria. And somebody, was asking about turn trades. Well, I mean, they don't happen in a vacuum. And see, right now, we're looking at the 1 minute chart. Okay. So, and if you scrunch it down, we can look at what about, a bunch of hours here. We can look at 12 hours worth of trading here, or 12 hours worth of price movement. So if you look at it this way, you can say here, 1, 2, 3 attempts, it didn't break it. So probably here is where you might want to take a turn trade to the downside. And then down here is where you might want to take a turn trade to the upside. And so by looking at it that way, it's like, oh, you just sit on your hands and wait. And you might want to wait for price to get somewhere around this level. And once again, you say, well, it's coming off a high there. Maybe I'll take that to the south. And you could have picked up a couple of pips and take that chance. Here you probably say, no, I don't want to take that trade because it's really not making higher highs. So once again, this is just all feedback. And so sometimes you just sit and wait and watch. And the thing is, sometimes you can look at these methods and couple them and look at other things. For example, we got the M30 candle shading here, and it's like you don't want to trade against the M30 candle color, right? So maybe you only take longs. Or maybe it's like, you know what, you're playing for a cover. It's like this M30 hasn't been covered. This one did get covered. This one got covered. And then just recently right here, this one got covered. It was a very small M30. And if you look at it, just looking at the M30 candles, there you go. And sometimes, depending on your setup, maybe you want to look at the M30 as opposed to the M1. And I always say, price is the same on all time frames. It doesn't really matter what time frame is. The price is the price. Time frames is just data compression. And then you can look here and say, hey, you know what? This 33,159, that's yesterday's high. Look at the price action around this level. Once again, feedback. It's like for the last 1, 2, it hasn't closed below. Last 2 hours now, we're on the third hour. It hasn't 3 hours, it hasn't closed below yesterday's high. It's crossed it, but it hasn't closed below it. And we know one thing about price, it doesn't like staying in the wick zone. So between here and here, that was probably yesterday's upper wick zone. We can just look at it real quick. There we have it. You see yesterday's wick zone right there. And you see you even had a holo trade, a highest open right here on that last H1. And you could have probably picked up maybe 10 pips, 8 pips. Nice little trade to the south. And so, depending on what you have on your chart, you're going to get different kinds of feedback. You might not have anything on the chart, and you can still get feedback. And so, if you knew that 33, 15, 16, that was yesterday's high, and you know that you watch what price has been doing, when you get the signal, you could have probably picked up maybe 3 or 4 pips here in a couple of minutes and be happy because you don't know what's going to happen next. And that's one of the things you have to learn about trading is that you don't know what happens next. Just because you get the signal, perfect setup, it can go against you. And that you're going to have to learn to accept that feedback, accept that about trading, the uncertainty. And you have to be able to be comfortable with the uncertainty because if you're not, then you're going to probably be doomed as a trader. So, fellow traders, the fastest 15 minutes in trading is just about over here. So, give me some feedback. Let me know what you think about today's video. And if you have any questions, feel free to ask. And when you're at your trading platform, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.